The Irish government has begun preliminary talks with European Union officials about receiving more than £50 billion in emergency loans. Ireland is preparing for another round of spending cuts and tax rises to try to tackle its huge budget deficit. Well, I'm joined now by our business correspondent Joe Lynam. And Joe, what's happened?
Well, what happened is Ireland had the biggest property boom and then the biggest property bust. Houses in Ireland are worth nearly half as much as they were 2 years ago. And the developers that built those houses have gone bust, and taking with them Irish banks. And so that bank debt has been transferred onto the Irish government. And of course, that's driven up the deficit. Deficit's around 14% and 32% if you add in the once-off bank costs. The markets don't like that, and they have driven up the cost of borrowing for Irish banks because they don't think the Irish government will be able to get this deficit down. And now it looks as if they're approaching the Financial Stability Fund for what I'm hearing between 60 and 80 billion euros. The Irish government may deny that they're in talks, but so too did the Greek government 6 months ago before they accepted 110 billion euros. And I can say that the Greek club that Ireland is about to join is not one that they necessarily do going cap in hand to fellow Eurozone countries for money.
Joe, for now, thank you. Our business correspondent, Joe Lynam.